Right, it's the moment we've been waiting for all morning. We are just a few seconds away from some new PCE inflation data, personal income and spending numbers, and initial jobless claims. It's the PCE number that's the biggie, though. That's the one the market's waiting for because that's the one the Fed watches so closely. Ahead of that, we've been watching the futures, and the Dow has been in the red all morning long, along with the other major averages. Dow right now down by 140, NASDAQ off by 44, the S&P off by 14. Rick Santelli is standing by at the CME in Chicago. Rick, take it away.
Yes, well, jobless claims, 215,000, higher than expected. 215,000 is the loftiest level going back to the beginning of February. On continuing claims, 1,905,000, and we finally crossed over 1.9 million. That's the highest read since the third week in November. Now the money numbers, personal income for January, up 1%, up 1%. And you know what's fascinating here? Last January, guess what? We started out up 1%. And last January, that was the highest level going all the way back to July of 21. So we're equaling January. This number, once again, could take you back to July of 21. That is a whopper of a spending jump, or income jump, excuse me. On spending, up 0.2, exactly as expected. Real spending goes negative when adjusted for inflation. That's down 0.1%, and down 0.1% equals what we had in August of last year. To find a lower number, you have to go to March of 2023. Now, let's get into it. The deflator, personal consumption deflator, month over month, up 0.3%, exactly as expected. In the rearview mirror, 0.2 becomes 0.1. Now, on the 310 side, that's the highest level since September of last year, something to pay attention to. Now, let's go back to the deflator, but this time the core, okay? And let's go, let's go year over year on the deflator, and that's going to be up 2.4%, exactly as expected. 2.6 in the rearview mirror, so making very good progress. This is the lowest level since February of 21. Now, month over month, core deflator up 0.4%, exactly as expected. And 0.4%, though, follows up 0.1%. So up 0.4% is the warmest number going all the way back to January of last year. If you round it to half, if you round it to 0.36 up to 4%, that would be February of last year, because we take these things out a couple of digits. And finally, year over year core deflator, in my opinion, one of the more important numbers, 2.8 last, what we expected, 2.9 last time, so we've made progress. Now, here's something interesting. This is my favorite calculation. This is now the 12th consecutive month that this has moved lower than the previous month, and that is indeed a very good thing, of course. Now, 2.8% is good, but consider this. Pre-COVID in March of 2020, this was 1.5%, just to give some context. Now, what have yields done? They've dropped precipitously here from basically 430 all the way down to 427. No, I'm being a bit facetious. We've dropped 3 basis points, but it is something to consider why we've dropped 3 basis points. And I think the real spending numbers being on the weak side might have contributed to that. We see that the pre-opening equities, the Dow Jones, has indeed moved up. And that's something to pay attention to here as well. It's getting close to, at least on the future side, positive territory. Now, I know that was a lot, Becky, but we want to take it step by step because these numbers are that important.